Good morning, traders. Richard here doing a quick Ichimoku cloud chart market review of the S&P 500 E-mini futures contract. We've got a 260 point short, that futures contract short, that's now worked out very nicely. If you just look at the daily Ichimoku cloud, sell signals up there coming off the 4-hour chart, but we got through the slice through the bottom end cloud chart support zone there, and then we entered bearish territory because price action below the cloud is bearish. This is kind of a line in the sand. That support zone is now a new resistance zone, so 6,000 will be the new resistance zone, any kind of relief rally that we have. And when it sliced through the bottom end of the cloud, we had these downside targets: 5950, 5938, 5877 from these lows here, as well as 5870, and then the ultimate target here is this 5822, the bottom end of the cloud here. And then also this top end of the cloud there, you can see there, that's also somewhat of a support zone that it's kind of being tested now to see if the index will have a sustained rebound rally from the 5887 zone. It's also incidentally a standard line support zone there back in October. So we are playing around with the October support zones, and if we could see just a brief technical retracement rally of this move back up to the bottom in the cloud chart levels if we get into March, but there's still downside risk to this 5850 zone and 5822, and if support fails at these levels, then the next downside risk target is this top end of the cloud there at 5778, and then the bottom end of the cloud there 5761. Let's put the little line in there. So that's the picture on the daily Ichimoku cloud from a futures point perspective. If support comes back, and yet it looks like that candle is giving us some indication that we might have an update today, just technically retracing about 50% of that move. We could see that come, but we're not out the woods yet because price action is now below the cloud, and that's bearish. So there's swing trade opportunities from these support zones back up, and there's short selling opportunities at these levels towards the downside risk targets. Let's take a look at the weekly one. Just from a big picture perspective, you can see we kind of got a double top here, or triple top, depending how many of those highs you want to include there. Had a tremendous strong rally since the third quarter of 2023, various pullbacks to critical support zones, and now we're in a period of consolidation. You can see this top end of the front end of the cloud is a support zone 5848, which we are kind of testing, and if you dig in there, you can see there's the standard line of the Ichimoku clouds, also kind of a support zone. So we got this 5848 zone that the index is now testing. 5848, very close to it. Got a couple of points away from it there, so it's a potential rebound zone. It is a significant one, and you can see these January lows also give you an idea that we might dip in there and then rebound aggressively back from those levels and have something similar to this back to the bottom end of the cloud. For the market to be bullish, we need to be back above the top end of the cloud. Okay, so we are trying to swing trade bearish, long and shorts within this retracement and support rebounds below the Ichimoku cloud. If we now take a look at the 4-hour, which is a great way to do the Ichimoku cloud trade. So you can see there was a beautiful sell signal up there, another sell signal when we sliced through the cloud there, and another sell signal when we slice through this bottom end, this 6041 major support zone. You can see the front end of the cloud also indicated that that is a significant support zone, which is now a new resistance zone to the upside. Taps then opened, struggled to and a brief rebound there, well, two rebounds incidentally, from the 5949 front end cloud chart support zone. So you can see how the market fought very hard to rebound from that zone, and we just see where this zone, that is the January start low there, as well as a bottom end cluster of support, as well as a mid January there sorry, February there, and the mid-January support zone. So these are three support zones. It comes from that 5949 front-end cloud chart zone. Slice through the support there, then hit the downside targets of 5887 and 5870. We're nibbling a little bit back now, looking for probably a technical pullback, just around about the 50% retracement mark. We could possibly have a rally back up to the turning line of the cloud or the standard line of the cloud, but these are upside targets in a kind of a relief rally here. And if we get past this resistance zone, then the bottom end of the cloud will be the next upside targets. But having said that, there's still significant downside risk towards this 5848 and then this zone here as well, and then these bottom two 5778 and 5760. So these are the downside risk targets, but should see a bit of a relief rally earlier next week just to consolidate this move. Because just like when we sell, when we get too extended from the top in the cloud, we now too extended from the bottom in the cloud. We look at the distance between the current prices and the bottom end of the cloud there. So keep an eye on that, for a potential rebound rally. Now, if we look at the 60 minutes one, hourly one, I can see there the sell signal there as well. Lots of other sell signals there, short sell signals there. Strong rally to the downside, hit a lot of the downside support targets, failed to stay above those. So in most cases, did have quick rebound rallies there, and we could see a quick rebound rally from this zone back up to the bottom end of the front end of the cloud, as well as that zone there at the top end of the front end of the cloud. So that's the upside resistance targets, and if this resistance holds, then we're heading back down to the other targets further down, 5848 and then 5822 to the downside. So we've got our trading strategy for us set out now in terms of the clouds. Watch very closely for potential support to come back in at this level, and then we're hitting those 5949 upside targets. And if support fails today, we're going to hit back at 5848, get back to those zone at 5822. So we have kind of two ranges in terms of that. But remember, price action needs to be back above the top end of the cloud to be bullish. And one way to keep an eye on it is if the hourly starts to trade back above the cloud, then we'll be more confident taking the trade on the 4-hour to the upside, because that'll be quite a long time before the 4 hours back above the cloud. So there are short-term swing trade opportunities, and keep an eye on that 60 minutes. If it's back above the top end of the cloud, then we have a bullish trend on the 60-minute. We've still got a bearish on 4-hour and still got bearish on the daily. So watch very closely for potential rebound from these cloud chart support zones. Until next time, happy cloud chart trading. Bye for now.